All right. Weekend can't last forever. I know that time flies when you're having fun, but it's time to get back to work tonight. It's Monday evening after all. It is September the 28th, 2020. My name is Joseph, by the way, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session. And I've got a jam-packed video in store for you guys and gals tonight. Charts are already in the background, as you can see. Got the oil, got the gold, and we got the Eminis on our radar for tomorrow. Speaking of tomorrow, lots of great setups we're watching for. Got some ranges on the oil and the gold. Maybe some fake out breakouts for us tomorrow morning. And of course, how about that S&P? Weekend gap, spike in channel. We might not be done going higher, but we might have both buying and selling opportunities on the Eminis for tomorrow. I got a lot to cover here in this video tonight. Plenty of reliable trades setting up for Tuesday's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video. And don't forget, if you guys have any questions at all, drop those questions in the comment section below. And as always, if you guys tune in to watch this video newsletter every evening, if you're like me and you rely on this video to get your mind right and those charts right for tomorrow, if you enjoy the video as much as I enjoy making this stuff for you guys, how about a thumbs up here on the video tonight? So don't forget, guys, make sure you subscribe. No excuses. I want you guys ready. Subscribe to our YouTube channel. Drop those questions in the comment section below and thumbs up if you guys like the content here on this video newsletter. But enough of the introduction. Let's get this party going. Time is ticking. Let's kick off this final week of the month, final week of the quarter with the calendar for this week. Boy, we got a busy week here coming up here. Now, like I mentioned earlier, right? End of the month, end of the quarter we're going into here this week, right? Sorry if I mumbled that back there, but looking at the bigger picture here for this week, right? We'll dig into the calendar here first, then we'll grab our charts here once we have the lay of the land here for this week. What do we know about this week? We know we are the very tail end of this month of September. So what does that mean? That means increased volatility, right? There's a sense of urgency as we go into the end of the month. And I warned you guys yet last week, right? I told you guys last week, the fourth week of the month, it's probably going to be slow, but be aware, this week's probably going to be a bit faster pace here this week. End of the month volatility. It's a sense of urgency in the markets these last couple days here of the month, right? Today, tomorrow, and Wednesday are the last couple days of the month. But it's not just the end of the month, right? It's also the end of September. And we know that 03, 06, 09, and 12, right? Those are the quarters. March, June, September, and December, right? We, of course, are at the end of the month of September. Why is that important? Because that means the end of the third quarter. The end of the third quarter means if you're a big corporation, you've got 3 more months to make your numbers look good for this year, right? If you're a trader, you've got 3 more months to get your act together to pad those numbers so your year to date looks good, right? There is a serious sense of urgency. We also know as we go into this fourth quarter, it's an election year, which means, unfortunately, I know, I don't want to talk about it either, right? But unfortunately, politics are going to start to work their way into these markets, right? It'll be a little bit difficult to ignore that stuff, right? The political stuff as we go into what is really just a little bit more than 30 days, right, from the election here on November 3rd. So we are really looking down the barrel of a urgency in the markets, a little more volatility. And yes, it does look like politics may start to show up a little bit in these markets. I know they probably have played a big factor in this leading up to this point, but unfortunately that will start having an impact for these markets more as we go into the final push of this election season. So that's the big picture stuff here, right? End of the month, end of the quarter, urgency, volatility, and of course, as we look at the news here for this week, we got a bunch of news coming at us here this week. Not a lot for tomorrow, though, right? Tomorrow, of course, Tuesday, the 29th. Now, there is some news in the calendar. You'll notice we got the durable goods or the goods trade. We got the Case-Shiller home prices, and we get the consumer confidence. Honestly, none of these are really anything. None of these are really that. None of them are really that big, bold news reports. We really start getting more of the big market-moving events on Wednesday, Thursday, and Friday. The big news tomorrow is that debate tomorrow night. I don't think it'll affect these markets too badly. I'm sure you guys won't tune into that. I'm sure nobody will tune in to watch that fist fight. But of course, that is tomorrow night, right? That is tomorrow night. I'm not sure if that will affect the markets very much. But the first presidential debate between the U.S. President Trump and the challenger Joe Biden, right? Tomorrow night. I can't recall exactly what time it starts. Probably like 8 o'clock Eastern time, something like that. I don't think it'll have too big of an impact on tomorrow's markets. But I'll tell you, if there happens to be any, I don't know, right? If we do happen to see any shocking revelations that come out of that debate, it may certainly have an impact on Wednesday. So we'll take a look at that for tomorrow night's newsletter. But as far as the news goes tomorrow, again, we got 8:30 news, we got Case-Shiller news, we got consumer confidence news. So none of these are really that great. Now, if I could only be at my desk for an hour tomorrow, when would it be? 9:45 to 10:45. Well, if I could be if I had a little more than an hour, 9:45 to 11. That is when we've seen some of the best setups in our trade room, some of the biggest moves, right, in the market, or the most, I shouldn't say biggest moves, but the most tradable moves have been in that block between 10 o'clock to 11 o'clock. So because there really aren't any big, bold news events tomorrow, I would definitely recommend, obviously we'll be in our trade room all morning tomorrow, but if you could only be at your desk, if I had to guess, the best time to trade tomorrow, 9:45 to 11 o'clock, just because that has been kind of consistently what we've seen over the last few weeks. Now, don't forget, tomorrow morning, we're going to be in our trade room, 8 o'clock Eastern time. I would love to have you there trading right alongside us there. Getting registered is easy. I'll put all the membership links you guys need in the description of this YouTube video. So grab that link and get registered as a member. And then that way you can come out and join us every morning at 8 o'clock Eastern time in the trade room. If you're on the blog at Sideways Markets right now, I'll put a big button for you right below this video tonight on the trading blog. All right, we're looking good. So news is set. End of the month, end of the quarter. Not quite the end of the week yet, but that's coming, of course, later on this week as we go into the month of October, right? Boy, oh boy, am I excited for the next few weeks. We're really starting to get into some of the best times to be a trader. When the weather starts to turn cold, the markets always heat up, right? October, November, December, January, February, third week of March, historically, is when traders really make the most amount of hay, if you know what I'm saying. Let's get those charts open up here. Jumping into charts here tonight. Boy, we got a lot to cover here on these charts. Gold, first of all, right? Gold trying to break free of that trading range from last week. It looks like they get a pretty strong move there, but I don't know. There are a couple of clues on there. I think I might be looking for the short side here unless they can prove something to me. Make sure you stay tuned on gold here for my plan on the yellow metal. Speaking of gold, what a black gold, right? The Texas T crude oil. Crude oil had a bull move, right? Oil was bullish today. But I'm literally not buying this, right? Figuratively and literally, I ain't buying this, right? I'm not buying this bull move higher. I think there's still a magnet down there around that $40 a barrel. And I'll show you why. It's a really big, there's a somewhat obvious clue on the crude oil that says we probably should save our bullets for the sell side. And then, of course, over on the S&P, boy, oh boy. Do you see the S&P today, right? If you blink, you missed it. Very strong bull run up into a spike in channel. As you can see, I've got it marked up with some failed rotation there. Let's dive into the S&P 500 first here this morning, or this evening. Wishful thinking, I guess, right? This evening, and we'll get ready for this chart here first for tomorrow. So what happened here on the S&P today? Well, obviously, somebody was in a very good mood when they got to their computer this morning. All kidding aside, it looks like something must have happened over the weekend that got this S&P in full-blown, what we call risk-on mode, because, Sunday evening, right? Market closed on Friday, opens up on Sunday. This is technically Sunday's open. You know what I mean? The markets go from Sunday at 6 p.m. all the way through to Friday at 5 p.m., right? So you got Friday's close and Sunday's open. And then you'll notice the first thing we see is a gap, right? Now, I call them weekend gaps. It's the difference between Friday's closing price, which is 85.5, right? And again, Sunday evening's open. The markets don't actually open on Monday. They actually open on Sunday evening. In the futures markets, at least, right? They're electronically traded. So the difference there creates a gap, right? And this gap hasn't been filled yet. Usually these weekend gaps, they'll go up, they'll come back, they'll fill the gap, and then they'll go. So that weekend gap is a big magnet. If the bears can take control of this market tomorrow, they got one thing on their mind, and then just go back to that 32.85 half. But we're not quite there yet. Oh, and I should probably mention too, I'm going to leave that weekend gap on there all week this week. Usually, these weekend gaps are filled before the end of the day on Wednesday, right? Last week, they filled it Thursday morning, if I recall, right? Was it last week or 2 weeks ago? The most recent weekend gap we saw, I think it was last week, right? They filled it, I believe it was Thursday morning. So usually it's before the end of the day on Wednesday when you'll get those gaps filled. Honestly, though, I'm going to leave that on there. If the bears take control this week, right? If the bears, if we get a reversal on this, you know where they're going, right? That 32.85.50, it's a magnet, right? That'll be a magnet, and we'll leave it on there for the rest of the week. So obviously, whatever happened over the weekend, and I won't bore you with the details, you guys see the newspapers, right? So whatever happened over the weekend was clearly a very risk-on, bullish scenario because the buyers just gobbled this thing up before most of us got out of bed, right, on Monday morning. By the time we came in this morning, right, we had, if you look at this in a faster time frame, it was a very small range up there, right? There's a range on this. The market originally went up and then back basically into a range here, right? It was pretty much a bull market into a trading range. And you'll notice what's going on right now, right? The market then broke above the range, and now we're retesting that high. It's a very big clue. We know the market's bullish. There's no doubt about that. My biggest question right now, though, which is a very important question here, is what's more important? Is it the channel, right? Because a spike in channel is a very important clue, right? We'll talk about that in a second. Or is it the channel? Or is it the range? Because the range, you'll notice, remember, ranges are magnets, right? Ranges are balanced. Ranges are magnets. So the reason why I have this kind of failed rotation reminder up here is because that's the big clue, right? That is the big clue. If the market keeps on rotating here, right? If we continue rotation, we know that range is no longer important. But if we do see, for example, like I'm seeing right now, if we do see that move up and that double top, well, guess what? Now that range continues to be a magnet. So there's definitely a bit of nuance that we have to be a bit concerned with here on the S&P. Now, remember, there's no question about it. We know we're bullish, so we definitely want to be a buyer on this market. I can think of a couple short setups that we'll talk about here for tomorrow. But really, at this point, what I'm really wondering is do we collapse back down, and how does that move look? Right? How does that move look? Now, if we call this a spike in channel, spike in channels are really, really specific. They tell us to look for a nice deep pullback. Usually it's down to the base of that channel, right? The base of the spike in channel is usually your best friend. And because I'm bullish, I want to buy at support, right? I want to buy at a support level. So if this is my channel, I look at the strong move up, that first pullback, right? So usually it's these first couple pullbacks here, the base of that channel. This is my support area. Now, my big question right now, though, is how do we get there, right? How do we get there? For example, if we have a concern about this being a trading range right now, I've got this 1 try, 2 try, this could easily collapse all the way back down. And if it does that, that momentum will be really strong. But if the market sits back inside the range for a while, now I'm not so worried about that bearish momentum. That's kind of my biggest variable going into tomorrow. I know where I want to buy, right? I want to buy down in this 28 to 19 area, and it really all depends on how we get there. So first of all, let's just say, for example, that we sink right back down to those lows here. If we sink back down to those lows, that's going to be a really, really strong pullback. And what I would expect is I would expect to see sellers try to get short, right, off the moving average. I'd expect that anything that, again, very strong move up, but if it pulls back, goes all the way back down, right, into my buy zone down here, I'm definitely anticipating this, right, to be rather bearish. And because of that, I'm going to wait for sellers to try to get short and then look to buy into their stop losses. So I'm basically going to be using a failure pattern down here. And to do that, I'm looking for, in this case, if the market really collapses going lower, I'm going to make sure those bears, I'm going to make them try once, I'm going to make them try twice before I try to get long. That's the first kind of setup I'm watching for right now. I'm looking for a pretty deep pullback on this. I'd like to see it nice deep pullback down into the base of that channel. But again, if we can get that much, if we can get that deep of a pullback, considering that there's potentially a range here, I'm knowing there's going to be a lot of bears in here. Let them try once, let them try twice. I'm looking to buy into those stop losses from there. And a lot of times what happens is the market will come over, pull back again, and give you those combination patterns, right? Those failure into pullback combinations. So I'm watching for a deep pullback, right? A nested failure pattern into a pullback pattern. Again, coming off of those lows. Now, another scenario I'm watching for here would be if we go back into the range and we kind of get, stuck inside the range. You know what I mean? If we get stuck inside that range now that momentum isn't going to be as difficult to handle, right? Again, I'm seeing that double top above that high. That's kind of a giveaway. This trading range might be the bigger clue on this chart. And knowing that, if we sit back inside that range for a while, what's going to happen? That's going to chill out that momentum, right? Momentum's not going to be as strong anymore. And then what do we do with that? Once we know we're back inside that range, how do we buy underneath the range? Now all we need are those failure and pullback combinations. So again, like I said before, I'm looking for a failure pattern and a pullback combination off of that low. The question is, will it be a nested failure or will it be a regular failure pattern, right? A two-try failure, as we call it in our trade room. And there's one more thing I'm watching for as well, and that would be if we continue rotation. Right? So if we continue rotation, in other words, if we finish off this rotation going higher, now what do we do? Now what we're looking for is I want to mark up that channel again, and we're pretty much going to play the same game, right? If the market gives me a really deep pullback, it's a nested failure, right? This is assuming the market gets that rotation. If they get the rotation, another pattern I'm watching for is a shallow pullback with a trap. Right? Shallow pullback with a trap. So one of the things we always talk about, right? Shallow pullbacks, I wait for traps, right? Deep pullbacks, I look for failures. If they're really deep, I look for nesteds, right? Or nested variations of failures. Now, guys, I talk all about these traps, these failures, and these nested failures. I talk all about these in my free trading course. If you haven't done so already, make sure you grab that little link that pops up there in the upper right-hand corner. Grab the free trading course. That way, you'll be able to see hundreds of examples of traps, of failures, of nested failures. And the next time we talk about these, right, in tomorrow night's newsletter, you'll be able to follow along with a lot more confidence. So pause the video and again, grab the little link that popped up in the upper right-hand corner, right? Don't worry, I'll be here when you come back, right? Grab that link and then come back and finish up the video tonight. And don't forget, I'll put all of the important links you need in the description of this YouTube video. So again, those are some of my key components here, right, for the buy side. Now, how can we sell this market? Could we sell this market? We definitely can. There are two sell side setups I'm watching for, right? There are 2 sell setups I'm watching for. One of them is going to use this range as the magnet. Really what I want to get short on this is I want to see them double top at this high, right? I want to see them pull back. And because we're so bullish, I want the buyers try once, buyers try twice. Now, I'm going to have to be careful here and look for either a double top, right? Or ideally, I would like a trap high on this. The goal would be to short, right, back into that range because ranges act as a magnet. But again, we're very bullish right now. So let those buyers try once, let them try twice. That is what I would anticipate we're going to get, is what I call basically it's a nested failure with a trap high up there. And again, the reason why I look for a trap is because I don't want to trade inside the range, right? And traps are my favorite entry setup to avoid selling too low. Now, this could also turn ugly, right? We got that weekend gap, right? We could also see a strong move down. We could see a pullback to the moving average. And instead of the bears failing and the market going back higher again, which we're expecting, the bears might hold that move and run. If they get that 1, 2, 3 reversal pattern that we talk about so much on this newsletter, 1, 2, 3, I get that question a lot. How do you know when a deep pullback is actually a reversal? It's actually pretty simple. Once they hold that pullback to the moving average and jump, then you know it's a reversal, right? If we see a deep pullback, though, all that is a deep pullback. I'll let the bears try to get short and we'll buy into those stop. Again, it all depends on the condition of the pullback, right? But they have to hold it. If they can't hold this pullback, if they can't hold the test of the moving average and run, there's no evidence of this being a bear market. It's just a pullback. So the bottom line is, another one of my patterns I'm watching for would be a 1, 2, 3 reversal into a hidden channel pullback pattern. Now, these are great setups, but you got to stay patient for them. You can't trust the first one. The first pullback's not very trustworthy. And if you're a relatively new trader, I hope you take my advice on this, because you will eventually learn the hard way that trying to predict reversals is not a very fun game in the long run. It's much better, much more reliable to wait for that reversal and then hit it hard, right? Don't get too aggressive at calling tops, especially in this much of a bull market right now. Weekend gap, of course, right, is the objective for those shorts. So really, that's kind of what I'm watching for tomorrow. I want to get long down off this deep pullback. Really, do we chop around in the middle and then go lower for a failure, right? Or do we just run lower into a 1, 2 and back up? Or do we run lower, hold it, and go? I don't care what direction I trade in. If it wants to reverse, go for it, right? I'm not going to go gambling on that reversal. I'll wait for my setup and hope that you will as well. Now, one more thing. What if we keep going higher here? If we keep going higher here, again, we go higher, shallow pullback, right? Traps off of those lows. That's one option. If it really rips higher, I will definitely be looking for a hidden channel, right? New hidden channel, buying the low off a new hidden channel. There's a lot of, as you can see, there's a lot of possible setups here, right, for tomorrow. Where do we think the market's trying to go? Probably up to that measured move, right? That'd be the first place I would look. And then from there, there's that 3,400 is that big round number. The measured move seems to be a pretty obvious target, though, because you had that big first leg up there, and they'll probably double that thing up and create that measured move. Another pattern I'm watching for is we call a 2-try breakout. In other words, if the market runs higher here, I will definitely be calling this a 1, 2, 3 breakout pattern, and I'll mark off that high, mark off that low, and look to buy the low of that new hidden channel. But I'll tell you though, this market, you saw how strong it was today. Something got under the skin of this market this weekend, and we may see continue if it really jumps. I'll also be watching for those 2-try breakout patterns. 1 try for the bears, higher high, and a trap low. This pattern, remember, this pattern requires a lot of strength running higher. Strong move up, shallow pull back to the moving average, higher high in price, trap low we go. Right? So those are some patterns I'm watching for as we go. And again, whether it be a 1, 2, 3 breakout, whether it be a 2-try trap, be a failure pattern, all of these patterns I cover in a lot more detail in that free trading course linked up in the upper right-hand corner. And again, we'll trade this stuff together tomorrow in our trade room starting off at 8 o'clock Eastern time. All right, we're looking pretty good. So S&P, I got a pretty good feeling about the S&P for tomorrow. My biggest question is, will that range really start to drag this thing back down here? Now, speaking of ranges, we got a bunch of ranges we're looking for here now on crude oil and the gold for tomorrow. Looking at the oil market first, what do we know about oil right now? We know the oil market is bullish in the short term, but look at the bigger picture here on oil, and what do you see? Yeah, we see what was a big move down a few weeks ago into this trading range, right? And that range is going to act as a magnet. Now, I mentioned earlier that there was one big, somewhat obvious clue on this. So if we know there's a range below us, what are ranges? Ranges are magnets. Ranges are balance areas. What goes up will come back down. What goes down will likely come right back up. So we know there's that range. What do we see, though? A strong move. That's the big clue that really tells you skip the buy side, focus on the sell side, at least for now, unless they prove to us that they can keep going. Because anytime we see a strong move in one direction, what do we usually get? We usually see a big bullseye right back at the top, and look at that. They just got their bullseye, right? They got their, what we call a retest of that high. So again, if somebody asked me what happened on the oil today, I would say, well, first of all, oil is a range. That range is a magnet. I want to buy low. In this case, I want to sell high. We did, however, though, see a very strong move at the beginning of today's trading session for the bulls. And as of the closing bell, the buyers had slowly worked their way up to kind of complete their objective, to finish their mission, right? They plant their flag. We've now retested those highs. Now that magnet should turn back on now and drag this thing back down into that trading range. Or maybe the market proves me wrong and we keep going higher, right? If the market proves me wrong and we keep going higher, we'll then look at this as a 1, 2, 3 breakout pattern, and we'll look to keep going higher as well. So the range is the magnet. Yes, the buyers do have some strength behind them, but no, they don't have any proof of a successful breakout of this trading range. So one thing I'm concerned about is that trend line. The one thing I'm not worried about, but one thing on my radar here is that trend line. And that trend line is important because if we, just like the S&P, it all depends on how we pull back. You know, for example, we know the market is bullish right now, and I want to be a seller. There's one pattern I can think of that is my favorite. You guys probably know the answer to this one. But what's my favorite? Well, first of all, it's a range, right? So whenever we know we have a range, what do we do in ranges? We focus on failures. Okay, so we know we're looking for a failure. We're looking for a buyer failure pattern, right? That's kind of the giveaway. That's the easy part. Now, a lot of momentum for the bulls. So what's the best failure pattern to kind of absorb that momentum? Now, we talked about this on the S&P, right? Remember how the S&P had that big move up? And I said if it collapses back down, what's it going to do? Let the bears try once, bears try twice, and then go back up. Remember that from earlier? That's the same thing here, but the opposite direction, right? I want to be a seller, but the buyers have all that momentum. So what's the best way for me to get short on this? I want to see a nested buyer failure pattern. In other words, let the buyers try once, let them try twice, and then sell back down again. Simple as that. Now, this is where the details of this are very important. You know, for example, my ideal scenario would be something like this. We pull back, we try once, we go lower. I draw a trend line off those highs, we pull back, and I can hit it off the trend line. That's buyers trying once, buyers trying twice, right? Hitting it off the trend line. That's always kind of the lowest stress, easiest entry going against the trend. But sometimes, though, what happens is you get this, and the market kind of pulls back sharper and does that. Now, here's the problem. If I draw a trend line like this now, does that? No, that does not solve the problem now because A, I'm selling very low, and B, I'm selling right into that support. So if we kind of sink back down here, what's the plan then? If we sink back down, and that's what the buyers try first time, now we look for traps. Why? because I don't want to sell low. I never want to sell low, right? Not just for a range, anytime. And anytime the only chance I have is to sell low, I skip that one and I wait for a trap high. This little trap might be our best entry for tomorrow getting short because it does two things. It gets us selling above the range and it helps us avoid selling into that rising trend line. Does that make sense? So again, I want to get short, right? The buyers look very strong, but as I mentioned earlier, I ain't buying it, right? I'm not buying it. I'm looking for either a 1, a 2, and like a relatively shallow or relatively flat trend line to sell back down, or do we get that sharper 1 go lower right now? Everybody watches above those swings to get short from there. It's the same basic idea. It's the same basic pattern, right? It's a nested failure. It's just trying to avoid selling too low. Now, we may also see the market, easy come, easy go, right? We may get one of these bad boys where the market takes off back inside the range again, right? So what if it just sinks inside that range for us? If the market sinks back down inside the range, that's when this trend line becomes our best friend again. Remember, what's the best plan of attack if we go back into a range? If we get into a range with a bear bias now, right? Now there's a bear momentum now. What do we do with a bear market into a trading range? We look to sell above the top of the range using what? Well, first of all, using a level of resistance, that's for sure. And the next thing is using what? Failure patterns, right? In other words, breakout failures. We wait for price to break out. We wait for those buyers to come in, try to get long off the moving average. Once those buyers get roped in, we can sell into those stop losses. Again, would love to use, that's why I said that trend line is your best friend once we get underneath it. Right? Once we get underneath it, trying to sell short into it, not exactly my friend, right? But when I'm underneath it though, now I can use it to get short on again, above the range, right? Into a buyer failure pattern. Now, this could also really turn bearish. Because if you look at this sucker, right, we're right up around those highs here. And the amount of the move above is the amount of the move below if it collapses. Now, where does that put us? It puts us pretty much right back around that 30, we'll call it 39 even, right? If I measure the amount above the range, bring that down below the range, we're right there, right? We're right there, 39.10, 39 even. There is a big bullseye on that low of day if these bears take control. Now, how would the bears take control of this? 1, 2, 3, reversal. Strong move down, pull back to the moving average, and strong move off the moving average, right? In other words, if they just ignore that trading range. Now, I'm going to tell you, it hasn't happened yet, right? They tried it there. See that? That's strong move down. They didn't get it continued, right? That's a strong move down. They didn't get continued. So don't just, there's nothing guaranteed on that next leg. That's the point I'm trying to make on this one. But if we can get that 1, 2, 3 reversal, now I can mark up that low. I can mark up that high, and I can get short off that high. One thing I've learned over the years about these 1, 2, 3 reversal patterns, and again, I get that question a lot. How do you know when a deep pullback is actually a reversal once they hold that pullback to the moving average and jump, right? They have to give me a lot of strength, okay? In both directions, not just bearish, right? In both directions. Right? Buyers have to do it and bears have to do it. So if I can get that 1, 2, 3 reversal, I can sell off the high of that channel. Again, targets are down around those lows. All right. So now I think we get a pretty good idea here, right, for how to get short. The biggest problem we have, again, is how does the market, right, how do we pull back? We know how to trade the reversal. We know how to trade it if it sinks back down into that trading range. We know what to do if it 1, 2, right, back down, or if it really pushes lower, right, traps above that high. That plan looks good. Now, how do we buy this market? Right? How do we buy it? Boy, very difficult, as you can imagine, to buy right here. I want to see more. First of all, where are the buyers trying to go? They're trying to go up to retest those highs, right? 41.70, right? 41.72. This whole area up here, right, is their big objective. Now, they've been trying to get back to those highs for weeks now, right? Weeks now. They have given it a lot of heave-ho, right? Trying. So something clearly has to change, right? Either they have to see a real big disappearing act for all the oil in the market right now. There's a lot of oil supply right now, right? We saw those hurricanes the last few weeks not even put a dent in the inventory report. So we know there's a lot of supply. We know it's not easy to get buyers to want to buy this market right now for many, many reasons, right? Between the pandemic, the oversupply, everything. So we really got to we have to see proof, right? We have to see proof. Now, what's proof look like? I want to see 1, I want to see 2, and I want to see 3, right? Show me that 1, 2, 3 breakout. I'll gladly mark up that high, mark up that low, and look for that first test off the low of that hidden channel, right? What are these called again? 1, 2, 3 breakouts. Again, look where we are. We're right up at these highs right now. I cannot justify being a buyer. If the market really takes off to the upside, if we really jump, I can then look for those 2 try breakouts. Strong move up, shallow pullback, higher high in price, trap low, right? That's the entry pattern, that trap low. Strong move up, shallow pullback, higher high in price. Buyers are waiting right below that low, right, to buy that trap. 2 try breakout pattern with that trap low. So now we've got a pretty good idea here for the patterns looking for. Got to get a lot more bullishness for the buyers. My strategy is to get short on this with the right entry pattern, and hopefully we can get this sucker to really collapse all the way back down, not just the range, but complete that pendulum swing down around those lows. Time will tell for tomorrow, and remember, I'm going over as many different scenarios and setups I can think of right now, but we're going to do it all together tomorrow in our trade room. So, I try to cover everything on these videos, but obviously I can't cover every possibility, so make sure you come out and join us in the trade room, and we'll fill in any blanks along the way. How about some gold? Boy, gold might be the most interesting out of all the charts here tonight. If someone was to ask me what's going on with gold right now, what happened on the gold, I would say, first of all, gold is a range-bound market. Right? It is a range-bound market. We can see today the buyers definitely have what looks to be, right, like a 1, 2, and boy, I don't know. That is very, very close. In my book, that's not a breakout. That's not a breakout. You know why? Look left. Look left. Look where we are here right now. Keep on looking left. That low back there, we've been talking about this low for, since it happened, right, back there on the 21st. What was that? Last Monday, right? That is a major, major turning point because that, as you remember, that's the edge of that trading range. So there is a big level of resistance there at 85.4. On top of that, right? On top of that, anytime I have a range market, I'm always looking for what I call, not what I call, but what everybody calls an expanding triangle. You'll notice trend line comes out, trend line comes down. Now, does that look suspicious to you at all? It should. You'll notice how the market rotates back and forth here pretty nicely. And look where we are. Top of that, right? Top of that range. Now, I'm not trying to say for a moment this is a bear market right now. It's a very strong bull run. But what I am saying is, if there's one place I don't want to buy, that is right here, right now. This is the last place on this market I want to be buying here. Now, we know where the buyers want to go, right? The buyers want to get back up to that 1910, right? That's that range we had from last week, if you recall, from last week's newsletters. But that range, unfortunately, we're a little bit out of reach for that range right now. There's a big magnet down around 1860 here that will be trying to drag this thing in. But again, we know we're very bullish, right? So we just talked about this on the oil, right? What do we do in this situation where, and you can even see, we get failed rotation, right? That trading range, the amount of the move above is the amount of the move below, right? So we can definitely see they failed miserably, the bears did, right? There's a lot of bullish clues in this chart. Right? They couldn't complete their pendulum swing. What goes up will usually come back down. They didn't complete the pendulum swing. They have a very strong 1, 2, 2.5, legged move up here. Very strong move going higher here. So there's no doubt about the bullishness that we have here right now. I just simply don't feel comfortable being a buyer up here. So what's the best way to do this? If I want to sell this market, right? I want to sell this market, but I've got to what? I have to respect the bulls. I really do. You don't want to ignore all of this momentum, right? The range is the magnet. Now you'll notice what I've done. I went out and I kind of anticipated, okay, what if I was a buyer? What if I wanted to buy this next pullback? Where would I do it? What I would do is I would mark up this 1, 2, 3 move like I always do, right? I would draw off the high, I would market the low, and I would look to buy the low of that channel. So this is where you can kind of cheat a little bit, right? You can anticipate where these buyers are going to come in, and just look for ways to sell into their exits, right? Sell into their stop losses. Wait for those buyers to kind of dig their own grave and just short right into them. And that's what my plan is here for tomorrow. What I'd like to do is, because we're so bullish, I'd like to look for a buyer failure pattern and sell this thing back down again. The problem is it's a very strong bull move higher. And anytime we see a strong move like that, we know the odds are still pretty good. At the very least, they get a retest of that high. At the very most, maybe they do continue going higher here all the way back up, right, to fill that magnet at 1910. So I'm looking for a failure pattern, a buyer failure. I'll be looking for those nesteds, right? Either going to be a 1, a 2, again, using that trend line and selling off a trend line, or if it really collapses, 1 and 2, looking for traps. Right? Same, almost the same idea we had on the oil. Nice bull run, horrible spot to be a buyer. I want to short back into the range. Do I get that 1 and 2? Again, using almost like a, and remember, the key here is you want that trend line to be as flat as possible, right? Because if it happens like this and we come down 1 and 2, now that trend line like that, what does that not do? It doesn't help me sell high, right? It's the same pattern, again, as I mentioned earlier, but it doesn't help me sell high. Not to mention I'm back inside this range up here. Not my idea of a good time. If it really collapses down like that, I start watching for traps. And I'll tell you, traps are my go-to pattern to avoid selling low, to avoid buying high. Traps are my way of just waiting patiently for that better entry, right? The better entry as we go. Now, maybe it does collapse, right? Maybe it does run lower, hold that pullback, and go, right? What do we do then? It all depends on what happens when we get back in that range. A lot of times it'll end up getting all chopped up, right? Like that. So if the market does end up back inside that range again, that becomes a bear market with what? A bear bias into a range. What do we do there? We find levels of resistance overhead, and we combine those levels of resistance with our entry pattern. The entry pattern I want to use is a buyer failure pattern above the top of that trading range, right? Look for that, again, if the market runs into that range. If we see a strong move down, the market holds the pullback, and we run right through that range, well, yeah, now mark the low, mark the high. Think of this like one big trend, right? It's a trend until we get down to that low again. You know what I mean? That's what it's trying to do. It's trying to retest the lows of that triangle. Again, though, if I get that 1, 2, 3 reversal pattern, looking to get short off the high of that new hidden channel. I'm not too keen on that first one. Just because, again, it's so bullish right now. Hopefully that makes sense. So range-bound market, the range is the magnet. It's a very strong move higher, which I have to respect. Let them try once, let them try twice, back down into that trading range. Do they turn it around and run lower? If they do, we'll find those hidden channels, right? Selling off the high of the hidden channels. If it gets stuck inside the range, we wait for the market to pop. We wait for those buyers try to buy that failure, again, buy the pullback, and we're selling right into those stop losses. And don't forget, if the market keeps on going higher, right, we can then start to consider being a buyer. So we've got a pretty good plan of attack here for the sell setups, because the plan is pretty much the same thing on the S&P, right, and the oil. What if we keep going higher here? If we keep going higher, that will confirm for us, right? If they open up and they run, right? Really run here. Good. Now I can feel confident. I'll mark up that high. I'll mark up that low. We're looking for buy setups off of that low. Maybe the market pulls back and runs, right? That range magnet is their radar. Strong run up, shallow pullback, right? Shallow pullback, higher high in price, trap low below that low. Again, same basic entry patterns as we break out to new highs. Just make sure we're buying low, buying at support. All right, guys? So now we get a pretty good idea here if the market runs higher. And again, if it just simply, right, kind of pushes higher here, rolls over and keeps going here, yeah, if it keep going to hold it, great. We'll find our channels, right? Look for those setups at the low of the channel here, right, to buy the low on the way up into that range magnet. What will probably happen, though, is if the market goes higher, though, it'll probably end up taking this channel with it, right? If the market does go higher here, 1, 2, 3, right, it'll probably take that channel right along with us. And then we'll look for those failure into pullback combinations, right, around the low of those channels. All right, guys? Again, magnet is that 1910 overhead, but we're not there yet. We are definitely not there yet. Don't forget, make sure you grab that free trading course that I mentioned in the upper right-hand corner. That way, the next time I see you on the newsletter, you'll know what I'm talking about when I say failure patterns, trap patterns, and all my favorite patterns. And then don't forget, tomorrow morning, 8 o'clock Eastern time, every morning here, Monday through Friday, we'll be in the trade room together. So don't forget to get registered as a new member. That way you can come out and do it with us every morning at the opening bell. I'll put all the links you guys need in the description of the YouTube video, or I'll put a big button for you below this video tonight on the trading blog. Please don't be afraid to call the office, right? Don't be afraid to call the office. I'm always standing by to answer all your questions. We have live chat. We got live support. So hit one of those buttons and chat away with us here in our corporate headquarters. And by all means, if you have any questions whatsoever, drop those questions in the comment section below for me. I hope by now you've hit that thumbs up button for me. You subscribe to our YouTube channel, because you know me, right? I want to make sure you guys get all the good stuff right to your inbox every evening, Monday through Friday. So guys, great job today. Had a great session this morning with all the members in the trade room. Tomorrow is another great opportunity, right, to learn and learn with us in the trade room. If I don't see you guys tomorrow morning at the opening bell, make sure you come back and see us tomorrow night on the next edition of this nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.